Good day, everyone. Well, we see a market that is attempting to continue its uptrend after the news about Russian troops into Ukraine. And we saw that the market had a very small, slight scare with that news. It gapped down fractionally at yesterday's open, but it then has since regained. And also from the gap down yesterday, that I think was the low point of the day. So the market's taking this news in stride. It's becoming old news to the market, and that is fairly typical market behavior to these sort of pseudo-crisis situations, which will appear as usually a small blip on an index chart. And you can see that the Nasdaq right now is becoming within striking distance of its all-time high of 5132, which I think is about a little over 10% away from where it is trading currently. So with QE continuing to pump, and if you look at the weekly chart on these major indices, you could pretty much draw a straight line through 2000, I'd say late 2009, all the way to present. It's a fairly straight line on a log plot on the Nasdaq, and you could do the same with the S&P 500. And therefore, the assumption here is that with QE pumping on full in some form or another through various central banks around the world, this uptrend should continue. The markets, of course, will have stumbles along the way. It will have minor corrections and maybe even something more pronounced. You'll see on the weekly chart, the Nasdaq had corrected in 2010 over 18%, and then also in late 2011 over 20%. And then since then, it's had two corrections in 2012 that were 12 and 13%. So we shouldn't get complacent and just assume that QE is going to be a smooth ride. It certainly hasn't. So we have to stay vigilant with keeping our stops tight in this kind of market environment where we don't really get full trends that persist like we were used to back in the 1990s, 1980s, and then of course we've had smattering of those persistent trends in the last 10 years. But since QE, we really haven't had a proper type of trend that we're accustomed to. So that's all to be said, that sometimes it is good to take your profits. I think that's more the rule for this kind of market environment we're in. And so you can do very well by moving your account up in baby steps. In other words, you take your 8% here, 5% there, 15% there if you get so lucky, and keep your stops real tight. And over time, when you look back over the last many months, your account might be low and behold 20, 30, 40% or more. And we've had some success stories like that. So that's good to know that some people are doing fairly well in a market that's quite challenging due to the fact that it does lack trends and it does lack downside as well. We've repeated many times since January 2013 when QE went on full bore. The corrections have been very mild, and they've been contained to within 6.1% on the S&P 500. So for those who are looking to short the market, the rule of taking your gains when you have them, I think, applies just equally to taking your gains on the long side when you have them. Gil?
Yeah, I would say I would liken it, instead of baby steps, more like little rabbit jumps. It's like you jump. I'll tend to jump forward, 5, 10, 15% real quickly. I have a couple of positions running nicely for me, and then sell into the rip and buy the dip. Although I know a lot of people out there want to buy the rip because they get all excited, and sell the dip because they get scared. And in this market, it seems like you really have to do the opposite sort of thing. And buying into strength is kind of dumb. But buying into weakness when you come into logical areas of support, it's the old saw, the 50-day, the 200-day, the 10-day, whatever. That's where you pick them up. And that's worked. So I don't know if it ever stops working and we go into a real bear market. A lot of people are writing articles right now predicting the immediate demise of the market. Maybe that's true, maybe that is. And I do think that you're in a position to pull back, though. But with so many people trying to predict the market top, maybe we're not really at that point yet. And so the only thing I would say here is you on the NASDAQ, you can see here on the daily chart, here's a double bottom, okay, and it's actually pretty nice double bottom because you undercut the lows here, and that set up the rally, and the rally's been very sharp from the beginning of the month. So, that's really all you know is that you've had this sharp rally, and there's been some profitable moves in a lot of stocks, and so you've been able to play them. Now you're up here, and I'm not sure that I think this is color-coded red. Did we open up more than we are at right now? I'm not quite sure why this thing is on there it goes. Now it's blue. Don't ask me what's going on with these things.
Yeah, we opened up a little bit higher than where it's trading right now.
Okay. So the market's kind of hanging out here. We'll see how it holds. I'm just watching the stocks, and I sell into rips when I get them, and look to be buying stocks when they're pulling back. Now I know, some people can't trade that way. They say because they have a day job, or whatever, and I understand that, but in that case, I think you're taking much smaller positions. I mean, one of my favorite things to do is to come in and if I see something starting to move, and just an example would be Twitter yesterday. The market was down, and I noticed this thing didn't want to sell off. And it's holding there. So I just come in and I start loading the boat, and I'll run a 150, 200% position intraday on something like this and run it, and then sell later on in the day as you're running up and back the position down. Then near term, I thought, 50 seems to be, it's a nice round number, so that looks like decent resistance on the upside, especially after the sharp move off the 10-day. You can see how it got real tight here. So that works pretty well, and that's a nice 10% move or so in about 4 or 5 days. So you can take that. Now I'll lay back, and I'll let the 10-day catch up and see what I want to do in terms of coming back into the stock. And right now it's definitely trading below where I unloaded all my shares once it hit my target. And I don't own any Twitter right now, and I'm looking to be buying it back. But I'll come back into it when it's starting to look, pulling back and everybody's getting scared. So other stocks like that, you can say JD.com. This had a nice move on the breakout, runs straight up. It's a little bit parabolic, and now this comes into the 10-day moving average. So you want to sell into that, or if like I'll run a core position and then sell a bunch of it into, say, 33. I think I had set in my mind 33 as a target a couple days ago, and I unloaded most of my JD into that. And then as it's coming down, watching to see how it comes into the 10-day moving average and whether volume is light. So, it's that's kind of how you work it. And it's a QE market, and I don't think that the standard rules as they apply to Can Slim and mindlessly buying breakouts is really the way to operate. One thing I notice these days is that if you talk about buying a base breakout, a lot of, as a stock moves to a new high, that's pretty well accepted. I can remember back, and maybe you remember this too, Dr. K, in 1991 when I first read O'Neill's book, and this idea of that you want to buy stocks as they're breaking out of a base and going to new highs. So you want to buy the stock at new highs, and you would tell people that they think you're nuts. And then what I've seen over the years is more of an acceptance of O'Neill's work. In fact, you hear terms like cup with handle on CNBC from time to time. So everybody knows all this stuff now, and I think it does become less effective over time. People have always asked, and you remember this, Dr. Hay, when we were doing some of the workshops when we were at O'Neill, people would ask, do you think that eventually with so many people using Can Slim, it'll work less effectively? And at the time, we thought, okay, maybe, yeah, it'll continue to work. Don't worry about it. And I think at this point, while Can Slim itself isn't necessarily widespread in terms of its usage, I do think some of the basic concepts that O'Neill has taught everybody, like base breakouts, buying on base breakouts at new highs, all that stuff, and the whole idea of everybody having charts and alerts and everything. Everybody sees everything all at once, and so I think it is somewhat less effective. Go ahead.
I remember saying, because we got that question quite a bit, and I remember saying to people by way of comparison that in the early 90s, in 95, 96, 1996, these were years where you had quite a bit of time to get on board a breakout. I remember because of that luxury, sometimes I wouldn't finish my screens because it would be 9 o'clock at night at O'Neill and I want to get home. But if I'd spent like an extra hour, I'd probably find more names. But there were so many good names to play, you didn't need to have that to that many names. And also the next day, because I was we were working doing all the data analysis stuff. You had to just bide your time when when you had an opportunity, then you'd buy stocks. But I was still able to do well because the market was forgiving. I'd have an hour of opportunity to buy a breakout. But by 1999, 1998, 99, when we were giving these talks with O'Neill, the markets had turned a lot faster to the upside. But also, it seemed like there were more retailers getting on board this whole canceling concept. So your window of opportunity wasn't an hour; it was more like 5 minutes. And today, in these markets, with everyone having the same access to the same information, your window of opportunity is often in the order of seconds, and you can see it on the real-time intraday charts. When a stock is going to go, it goes. Sometimes it'll go 6% in a matter of in a minute or less. So if you're not there, right at that point, when your alert goes off, and if you're seconds late, that's going to cost you money.
So all that is to say is that sell the rip, buy the dip, and that's been a very effective strategy for me in 2014, also last year. And the concrete weapon, tool, whatever you want to call it, that enables one to take advantage of these rips, I think, is pocket pivots. And I use some other things. I use a 5-day pocket pivot when I've got other indicators going on my charts that I use on HGS Investor software, and I'm not really going to go into it because all that's proprietary, and I'm sorry, but for $59.95 a month, I'm not giving away the farm. Sorry, guys. Hate to disappoint everybody. So for now, you're just going to have to be happy with pocket pivots and trying to figure out how I determine a 5-day pocket pivot. How's that? Anyways, I get some people. Happy birthday, Gil. Thank you. Today is my birthday, although I like to think of it. I really stopped thinking of it as years. I'm just doing sun orbits at this point. So I'm on my 55th sun orbit. And things are moving along pretty well, hoping to do at least 100, but we'll see how that goes. In the meantime, let's see. You mentioned Twitter and Tesla hit your near-term price targets. How do you establish price targets? Well, first I check to see if the moon is in the 7th house and Jupiter's aligned with Mars, and if they are, then I sell. So I just kind of eyeball it, I use my instinct. I use my I also look at sort of, I guess you would say, looking at profit profit amount. So if I've got a 15%, 10-15% profit in a stock in 3 or 4 days, I'll generally back off and take it. I appreciate the liquidity of the stock market. The stock market allows you to move in and out of stocks fluidly and quickly, and I have no problem taking a profit because I know I can buy a stock back if it sets up again, even if it sets up a little higher. And in this market, I think a profit in hand is definitely worth 2 in the bush, and I prefer to operate on that basis, and I'll continue to do that. But people ask me, how do you determine your price targets? I got a percentage objective. It's not perfect. It's not like you're selling right at the peak and then the stock comes in. You can see today selling, unloading Twitter at 50 was the perfect strategy because now it's at 49.39 and coming in. And that makes sense. Tesla at 270, now we're at 271. Not exactly perfect. But some of it's judgment and some of it's just understanding in this market how much it's going to give me and taking it rather than trying to play supposed long-term moves in leading stocks, which I think is very difficult given the choppiness. But if you run small positions and you buy right and you want to sit with this, that's another way to trade, and that's perfectly fine too. So it's just not my style. I just got to ram them and jam them and go in heavy when I think something is moving. And I would have to say that my experience, and you probably would agree with this, Dr. Haywood, you can smell when things are starting to percolate and when you can go in aggressively, and that's really what I look for. So
yeah, I want to make a quick comment also on in terms of moving averages, because we have gotten questions about 5-day, 10-day, 21-day, etc. And as we've said before, it doesn't really matter what moving average you use as long as you're comfortable with it. In other words, it has to fit your trading personality. So the 5-day that Gil uses might not work for your personality. So
I don't use a 5-day.
exactly what he's if you knew exactly what he's doing, you might end up losing money because, Gil's trading personality is different from yours, chances are. Just as most people's trading personality is like a fingerprint. It's unique to the individual, which is why, being spoon-fed stuff without doing your due diligence is a dumb way to go, because it's probably going to end up costing you money in the end. And all that's to be said. There's no get rich quick. You got to burn the midnight oil. You got to do due diligence, at least on the tools you wish to use when you're trading the market. If you take absolutely blindly, the advice that we're giving you without really doing your homework, then you're potentially setting yourself up for losses, especially when the move goes against you and it falls outside of your risk tolerance levels, and you're liable to sell. You're liable to think, Gil and Chris, Dr. K be damned. I'm going to get out of this position, and that might actually be the bottom of the trade. So keep that in mind, that you really should be focused on rules that you set for yourself that work for your style. And we provide the books and the FAQs and the advice as training wheels, so that you can take them, digest them, and then maybe use them barefaced if they work. A common example is someone said, okay, well, I don't like using 3x ETFs, they're too wild. Well, fine, use a 1x ETF, or why don't you just size down your position on the 3x? Maybe trade 5% or 10% of your account instead of going in, whole hog. So these are experiments that everybody has to encounter, so that they can set up the right system for themselves and hopefully be profitable over time.
Good points, Dr. K. But I did want to point out, I don't use a 5-day moving average. I have something that I guess you could call it a 5-day pocket pivot, but it's really based on using my HGS Investor secret weapon chart, which for those of you who use the software, it's available as a ready-made chart view on the system. And I should say, I can't say too much, but they're coming up with a lot of great improvements to the software, and I'm excited about it. I'll be beta testing, hopefully, some of the new stuff. At least they asked me the other day if I would. And one of the things that they've done is they've embraced our work, which I think is smart, rather than denying it like other people like to, which I think is pretty stupid and narrow-minded. But when you have a franchise to protect rather than to grow as a source of truth for tackling the market, then I guess that's what you're left to doing. But I think what they're doing there is definitely going to make that product much better. But that's what I use, and I'm not going to get into how I do it. A lot of it is seeing the chart patterns, going through a lot of charts, and seeing similar things occurring over and over again that tell me that it's a pretty good probability that it's going to work. So I don't know, if Tesla keeps going, I may have to buy it back. $271.39 on the offer now. Let's see here. Somebody wants to know AVGO BGU, why no VOSI report? Because we're wasting our time doing this webinar. I don't know. Because I guess there's no hurry here. Here's a stock. Here's a weekly chart down here. So we'll just do this. Stock's had a good run, so it's gapping out. If you see a viable gap up and you want to buy it, just buy it. You don't need us to bless it. You know the rules. The low here is 81.82. You're trading at 82.86. You want to buy it. You know the rules. So I think you can buy any viable gap.
There's nothing wrong with this one, but do keep in mind that in its price history, it has a tendency to violate the 50-day.
Right.
It's done that twice in the last few months. So
it's
and it's a semiconductor. Semiconductor stocks tend to trade a little more sloppy. So always keep that in mind. In other words, if this were to violate its gap up here, you might want to actually give it more than your normal 1 to 2%, just knowing that it tends to be a little bit more choppy in its pattern. But as far as the fundamentals, everything's looking pretty good on this one.
Yeah, it looks fine. But it tends to be erratic. So if you want to buy it, go ahead. But whether that's going to result in a huge upside move, that's another question. But don't let me stop you from buying it. Go for it. Load the boat. Let's see. As long as you have your stop.
Yeah, I mean, this is one that also, depending on how it trades, because sometimes we will list a Bible gap up right at the open if it's clear cut. In cases like this where it's a little bit less than clear cut, we might decide to add it later in the day if we'll see how it trades.
Let's see. I'll show you some stuff I'm watching here. This is LinkedIn comes into the 10-day moving average. You get some support yesterday at the line. I was afraid it might break down below the line, but it's coming off. GW Pharmaceuticals coming down to the 50-day, trying to hold there. It needs to hold that 50-day. Right now I think you're just at the 10-day. A little bit tenuous, but again, these moves, it has this pocket pivot here and then here, and those are sharp moves, and the next day it goes a little higher, but then it rolls in, and you're getting a 5-6% move there off the 50-day. Sometimes you can just sell some into that and then take it from there. So anyways, let's see. G-Pro with a question mark. What about it? I don't. Things like way up in the air. You're trying to break out of this double bottom base. Notice one thing here though is that the double bottom base doesn't undercut the first low in the pattern. So there might be flawed, but it's moving. So if you bought it, say at the 10-day, here's a pocket pivot coming up to the 20-day. Sometimes that'll work, and sometimes I'll try those. Again, that's not the orthodox pocket pivot type move, but bottom line here is you're up there, you're up in the air. I mean, if I owned this, let's say I bought it somewhere in here, I probably would be selling into this move, and I probably would have sold it yesterday, which means it would have gone a couple of points higher without me. But that doesn't really bother me. I'm going to go through some questions. PCYC. I'm going to buy 100 shares of Tesla right here to stop it, okay? So if you're thinking of buying it, just hold off because it'll probably immediately come in. Let's see. PCYC is just hanging out tight sideways. I don't see any buy points in here. You had this gap up move and now it's holding tight. So LinkedIn I just talked about. When Dr. K said you only have a few seconds to make a buy these days, are you referring to breakouts or to any buys? I think wasn't that you were talking about back in the old days, right?
Well, back in the old days, you had an hour. In 1996, you had a lot of time, and by 1999, you had less than 5 minutes, less than 10 minutes, 5 minutes, and then these days it's seconds. And what happens is everyone rushes in at the
they
same
all
time.
see it. Everybody sees it at the same time.
Yeah, and then the stock comes in. It ends up being a failed breakout. If we had stronger markets, though, if we had stronger uptrends, my guess is that the breakouts would still happen just as fast. And you would get a lot more volatility in the pattern. So stock might go up 8% and then pull back 7%, shaking a lot of people out, and then more people would come in because the market continues to trend higher. And so you'd have to probably reinvent or rather adjust your selling rules for that kind of market environment, simply to accommodate for the higher levels of volatility if you wanted to be able to ride such an uptrend.
Somebody says they sold G-Pro into the RIP today. Well, that's good. But how did you determine to sell it into the RIP? I got a hilarious question yesterday when I was in the chat room. Somebody asking, can you discuss the pros and cons of selling into strength? It's like, what amazes me is how often people just can't apply common sense to certain things. See, they think there's some set of rules, some checklist that somebody's going through to determine something. It's kind of like, can you give me the pros and cons of a sunny day? It's like, well, the pro is it's sunny and nice. The con is you might get a sunburn. If you use a little common sense, the pros of selling into a RIP are that the stock will come back in and you'll lock in a profit rather than sitting there and watching it all come in. The cons are the stock continues higher without you, like Tesla is doing this morning, going a little bit of a buck past the 270 level, but Twitter coming in and looking okay actually on this pullback. So I may have to come in and buy another 50,000 shares. So everybody run in before me. There you go. Let's see. Oh, I think the funniest thing this week was a guy. I've been talking about how in my view, Tesla is really a battery play stock. If you think about these plugs and the Ballard and all this, or butt plug as I like to refer to this one, I think these are the low quality names. And when you look at Tesla, it's the high quality stock that institutions are buying up. And, there you go. Hey, Dr. A, is that a viable gap up? Maybe we should all be loading the boat here.
Well, it's been looking good to me.
Yeah, it looks great. I mean, I've owned it. Not right now, though, but maybe I just have to buy it back. But some guy says, I think I said on Twitter, I tweeted that you want to own Tesla as a real battery play, not plug. And they said, well, and I said, well, why would you want to buy plug? And some guy tweets back to me, because plug is up 200% for the year, and Tesla is only up, I don't know, 20% or something, 30%. But that's kind of stupid, because if you buy a stock that's up 200%, you don't make the 200%. So just want to make that one clear. But it was amazing to me how stupid this particular individual was, because he bought it, I guess he bought it around 3 in here, never sold into any of this, even though you've got a bunch of sell signals and violations of moving averages. So here's someone who's bought a stock, and they're going to stay with it till it comes all the way back to where they bought it, as far as I'm concerned. But the guy tells me, well, he's doing what Livermore says, he's buying right and sitting tight. And I would say you bought right, but you're kind of stupid now. And it's just kind of comical.
A little information can be very hazardous.
A little knowledge is a dangerous thing. So to me, that was all pretty funny.
Everything's contextual. I mean, every piece of advice can be turned into an absolute mess if it's interpreted the wrong way. I mean, this is a classic case of possibly this person, whoever it is or she is, should ask themselves.
It was a man. It was a man.
Story. Okay, well, he should ask himself if they haven't fallen in love with this stock, because that's pretty classic blind behavior. Just okay, so you've got a big profit in this stock,
Not so big.
and yeah, you should have some kind of sell rules intact, because what if this is one of many stocks that don't make it? I mean, yeah, it's had a huge run up, but there's we could show you thousands of stocks that have had similar run-ups over the decades, and then guess what? After they hit their peak, in this case, 11.72, that was it. That was the end of their run. And years later, you look at these things, and they're back to being penny stock status. So you got to be really timely about your entries and exits, and that's the whole point in having buy and sell rules that work for your personality. I mean, yeah, this individual needs. I would say, he should go back and reread How to Make Money in Stocks. He should reread our books and figure out some rules that I mean, the fact that he still owns this is there's a lot of holes in his strategy that are going to end up costing him money. Even if this one were to go, let's say, to 100, and he's right, and he makes a mint on this one, he is defying the statistical odds supremely. And so if he uses that technique for 99 other stocks, he's probably going to lose out on every single one.
Yeah, my view is you probably shouldn't be investing at all. But as I like to put, a little knowledge can be a very dangerous thing, and people need to be careful of that. That's why I regret sometimes talking about a 620 chart or talking about I'm using a 5-day pocket pivot, because some people will jump in and start thinking that this is some magic thing that they need to start using, and they don't really understand it. Let's see, MNST. It was a viable gap up, I guess, but not really. I don't know. This is what it looks like on a weekly, and it's come in. I don't know. It's violated the gap up, so nothing really happening there. So you kind of want to be careful buying this. So someone says, I sold GPro because a big obvious rip and it hit the magic 50 number. Looking to buy back on a nice pullback, or maybe not. Maybe it doesn't go up anymore. let's see, Pan W, which is our favorite, Palo Alto Networks, had a pull down to the 50-day. Yeah, it held up. Notice how, you know, by the dip here, it's looking pretty grim as it comes down and it goes through the 50-day. Notice it holds above the 65-day exponential and then bounces right back up. So they come out with earnings, what, on September 9th, I think it is. So I'm not a buyer of it, so just so you know. NXPI, well, it's gapping up. This is another one. This is kind of like that AVGO. Aren't they in the same business? It's a gap up. I don't know if it's buyable. If you want to buy it, go ahead. But I don't know. I don't really get excited about this stock. It's just it's slow and choppy and doesn't really have a big move. Maybe now it's going to, now that I don't like it. Let's see, VIPs dipping. It's coming down to the 50-day. It's not there yet. I'd hang, probably see what it looks like at the 50-day, but you know, I'm not going to tell you to run in there and start buying it. TSM EM made deal with Panasonic and sale, blah blah blah. TSM. I saw that yesterday. There's a pocket pivot. Was it yesterday? I thought, yeah, it's yesterday. There's a pocket pivot there. It's moving higher. It's a small, thin semiconductor moving on news. So, you know, you kind of have to decide for yourself whether you want to buy something. It's not something I would buy. Although it trades, what, it trades like 500,000 shares, 645,000 shares a day on an $11 stock. Not going to touch that. Not really. It doesn't meet my liquidity requirements. I'm watching Twitter come in right now. 49.38 bid. Market's turning back to the upside. So the market's actually pretty strong here. $3D. I thought 3D was a buy. I think I talked about this last week, that it was a buy. Probably it was my deep doo-doo play along the 10-day, and I was picking up my usual signals on this on my HCSI chart view, and so that's where I thought it was buyable there. Now you're at the 50-day, so I'm not really going to touch it here. I think if I bought it down here, I'd probably sell into this move. If you bought it down here, you should sell into this move. I sold it sooner. I actually did buy some, but sold it sooner. And they always go higher. That's fine. Facebook. I think Facebook, and Dr. K, I think you've agreed with me on this, or we've agreed on this, rather, is that Facebook is probably over-owned at this point. Would you agree, Dr. K?
Well, I'd say whether, you know, it is top heavy, shall we, you know, it is definitely top heavy. However, and as we know, that can create some headwinds for a stock. My question, I guess, is more to the point of whether Facebook has what it takes to continue its very torrid growth rates. I mean, earnings have been triple-digit quarter over quarter, and it's already has a market cap of close to $200 billion. And it does dominate the market, but it's an incredibly competitive space, and there are signs, nascent signs off on the distant horizon that there are going to be other types of ways to deal with social networks in more effective ways than Facebook can. And this might be 2, 3, 4 years off, but Facebook has to face the fact that to maintain this kind of network, this social monopoly network, is going to be incredibly challenging. And so I kind of have my doubts as to whether Facebook can continue to grow at the current pace. And if you look at the, you know, 200 billion for it to go, you know, for it to double from here, and it's more than doubled certainly over the last year. For it to double, that implies a market cap of $400 billion. So it really has to make all the right moves. It can't make missteps, and it also has to deal with the smaller competition. We all know that the patterns of stocks like Microsoft and IBM. Once upon a time, they were 20-something-year-old sprinters, and they dominate their space, and they did phenomenally well. And you could, if you played it right, you'd make hundreds of percents, several hundred percent off such stocks, trading them. And then eventually they get older, and they get more mature, and they continue to dominate various areas of the market, but they don't dominate everything. And there are the new lifeblood of all new economies. That is the new growth stocks, the smaller cap growth stocks that will take away market share from companies like Microsoft and IBM, such that Microsoft and IBM and any other company, I don't think there is no exception to this rule yet, all these companies eventually slow down in price acceleration. So while these companies once upon a time might have gone from 20 to 100 pretty quickly, to go from that same level, 100 to 500, typically will take years instead of months. And Facebook, I think, faces the same hurdle here. And I'm not expecting, given the fundamentals of what I understand in social networking, I'm not expecting Facebook to be all of a sudden a dominant player, continue to be this dominant player, because there's just too much competition on the distant horizon. So all that's to be said that it might have some swing trades in the pattern and whatnot, but I'd be pretty surprised if we're looking at a $400 billion company within a year out. And of course the idea in buying stocks is, in better market environments, you want to be buying a stock that you think is going to at least double, if not more.
Yeah, and like I would say, orange is the new black and Twitter is the new Facebook. I think you'll probably see more money flow into Twitter. It's going to pull back here a little bit. I'm watching it intraday, but I don't see anything telling me to buy it just yet. So I would be focusing there. Also, LinkedIn seems to be coming back, and I'm not really sure what's up with that. Now all of a sudden my chart doesn't want to update. There we go. I don't know. eSignal's getting kind of cheesy these days. It freezes up a lot. Does all kinds of weird stuff, Dr. K. But wouldn't Facebook be a place for the big boys to park money like they do with Apple? I think they're already parked there. So, the big boys parked Apple. They're parking it now because it's a dividend stock. I think you're attracting different types of investors who are oriented more towards dividend-type investments or stocks that pay dividends. So Facebook doesn't have as good a dividend as Apple does. So I don't see that. But you just look at the pattern. It's just tracking sideways. That's all it's doing. So that's all you know. So I'm not going to make some sort of prediction that it's going higher or going lower. My expectation has been for a while that Twitter's probably going to rise up as Facebook either bides its time and goes sideways or starts to come in. So, if you want to make some argument about the big boys could be buying it, I mean, to me that's kind of silly because they've already bought it. There's something like, what's the percentage ownership in this turkey? Like 68% institutional ownership in the stock. So,
yeah, it's up there.
Let's go through some more questions. Yelp me. Yelp's trying to come back. There's like this cup with handle. You might call this a low handle. I don't know. But I would just focus. You had a pocket pivot here, I believe. Was that? Oh, there's a 5-day pocket pivot. So see that? See how that works? And I think it was getting pretty tight in here. I don't know. But it's just up here. I'm not a buyer. There's no buy points. If it meets up with the 10-day, you see a continuation pocket pivot, maybe you could buy it. But I'm still, I think it's already had a pretty decent move. I'm not really interested in it right now. If you want to buy it, go for it. Alexion, it goes nowhere, just tracking sideways. So a lot of the biotechs, Gilead continues higher. That I guess I forget who it was. One of their competitors, their competing drug to Sovaldi was dinged or something like that. That's what set this move off. So Celgene has been continuing higher. Biogen actually had a pocket pivot the other day right here. That's red. I don't know why. Oh, there it goes. Wait. Here's a pocket pivot right along the 10-day moving average. Does that mean it goes higher? Maybe so, maybe not. I don't know. But this looks like it wants to go higher. So, and you could buy it, I guess. Would you buy this pocket pivot, Dr. K? Does this look okay to you? That's what Biogen looks like right now in the weekly chart. It's in a base, trying to come out. It looks okay.
Yeah, it looks tight and had the gap up on the earnings. I mean, it's not not doing anything particularly wrong. So you can take a shot on this. It's very tight in the pattern. The fundamentals
Yeah.
continue to look very good. So it's going to be a slower name, but that's okay. I mean, that might fit your trading style. So there's nothing wrong with this.
Twitter keeps coming in. Okay, well, just keep bringing it in there. Let's see. CMG, Zebra, actually, we'll start with Zebra. Well, that's violated the 50-day moving average, so, I don't know what you're sitting around with your finger up your nose for on this one, or if you think you're going to buy it. I don't know. This one's been kind of erratic, but it has had a nice move from here. I think some people I know were buying it, at least some people in the chat room were buying it in here, and it did pretty well. But now you violated the 50-day moving average. So, and if you've read our books, I don't really know why you need us to comment on this. You should already see this. CMG, 6 weeks tight with the VD. You hear it squeaking. I don't know. That might be you're hearing some part of your body squeaking. Yeah, I see this. But notice here, you got higher selling here. It's wedging slightly. My guess is it's probably going to pull in at some point. But I don't know if I'm just going to jump on it right here. And if you want to jump on it right here because you think you hear it squeaking, then go for it. But and like I said, you don't need us to bless these things for you. And if you do, then I don't think you should be investing. Period. Let's see. What else is looking good? Did CRM price their secondary? Anybody know? Let's see. I was watching it. I think they did. I got to check this real quick. Twitter is still coming in. Keep coming in. That's all I have to say. I'd probably buy it at 48.50. Let's see. No, wait. Let me measure this. I'm actually looking at this. Yeah, it probably needs to come in around 48. Wouldn't surprise me. One thing you have to remember with Twitter is that there's a lot of insiders who might want to sell shares on the way up, a lot of employees. I wouldn't blame them. It doesn't mean there's anything wrong with the company. But I do think that it is susceptible to that from time to time. And over the last few days, you have seen it come in. It'll come in real hard. I think on Wednesday or Tuesday it was coming in real hard during the day, down 70, 80 cents, and they were pounding it. You saw a couple million shares go by. And I think that's just a bunch of insiders getting rid of some stock and taking some money out of the company. So I watch those when they start pounding it, because usually when they get it done, you start to see it bounce back pretty quickly. Let's see. Any more? Somebody says, enough. I have to wait 3 days for trades to settle, therefore it's hard to jump in and out. Right. I do the same thing. I run a couple of IRAs myself, and this e-signal keeps freezing up on me. I don't know what's up with that. I use another platform, and that one doesn't seem to freeze up. Maybe it's time to just switch out of this thing. Anyways,
maybe you. I would just call them, because mine's been fine. But you might have had corruption in the software, so I'd uninstall and reinstall it. But I would have tech support walk you through.
Okay, thanks for that. Let's see. In IRAs, you have to take a completely different view. The way I handle IRAs, you can't use margin, so it's not, they're not going to be accounts that I'd use my typical slam them and jam them type approach. But yeah, you take smaller positions and you try to sit. So that's a lot more difficult to do, I think, in this market. So I think it's harder to make money in accounts where you can't be that flexible, and so I think the odds are stacked against you. Somebody, would you talk about what kind of action is constructing when looking to see how a stock absorbs a secondary? Well, again, what do you think would be constructive? A little common sense would go a long way here. If they dump 10 million shares into the market, I'm going to mention that this grub was a nice trade off the 10-day here. Runs up, you sell into the strength. But did they price their? I'm thinking of this as an example. Let's see, grub. Whoops. You see anything there, Dr. K? Did they price?
Well, they did a.
They got a 10 million secondary, which is a lot. I think it's a fair bit of stock for a small name like this. Let's see. No, they haven't priced it. So, I think you just watch how it acts. If it holds tight, then that's constructive. Sometimes stocks will move higher after a secondary. So, if it holds tight or moves higher, that's constructive. If it tanks, that's not. But, did you have to really think about that? Common sense goes a long way in investing. I think we got to write a book on that, using common sense when investing. Because you get more examples dealing with people through the websites. At least I see more and more examples. And even on Twitter, it's like, it just boggles my mind. It's like, what is this guy thinking? And the application of common sense, that's all you need, people. A little common sense, a few rules, and you probably will do pretty well in the markets. But if you need somebody to hold your hand and you're looking for some magic formula, it isn't out there. So, but I'm just amazed. People ask questions, I think, that just indicate they're unable to apply common sense. And I don't mean that, to slam anybody. I'm just telling you, think about it. You actually can use common sense. Most people have that ability. They don't always employ it, but I think it goes a long way in the markets. So, anyways, blah, 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 blah. Somebody says, no magic formulas or soup for morons. You got it, Dr. Q. Okay, where were we? Somebody asked about FANG. FANG is it's trying to come back. Again, here we have the ugly duckling theory in full force here, and they're trying to turn these things around. I've been actually watching all these. You got this one, BCI is hanging in there. It looks like it's trying to come out. You got EOG, and these things were all ugly, ugly ducklings, and now they seem to be trying to turn the corner here, and they very well may. It wouldn't surprise me, so I'd be watching that. Let's see. WUBA short. I'm not going to short WUBA. It's crazy stock. But again, here is a. I remember I was on the chat room on this day right here. Right here, it was June 9th, and I saw this thing getting tight and starting to turn blue on all my indicators on my secret weapon chart, which really isn't a secret weapon anymore, but everything's turning blue, and I said, yeah, this thing looks like it's ready to go, and it runs up, and 42 to 55, 20-something% profit. If you didn't sell into that, you are a moron. Because now if you held it, now you get to see the whole thing come back, and a lot of these Chinese stocks are the same way. I think is this a Chinese stock, this Auto Home? This one's actually, look at the moves in this thing. Huge moves. It breaks down, again, sell the rip by the dip, and now it's coming in again. But,
Yeah, it's been
WUBA,
automobile.
I know on the
Chinese
long
stock.
side, it was pretty, it had a nice brief move, big cup, and now it's breaking down. I don't really know if I'd short it. I'm watching some of these things that are forming right shoulders. This workday is pumping. It got hammered. Again, here we go. It's sitting here trying to figure out if it wants to finish making my chart for me. The thing gets hammered on huge volume, and now it's turning back to the upside here, and I'm wondering if it's going to get shortable right up in here if it rolls over. We'll see. Let's see. This grub had a nice move. You probably that was all manufactured so they could do the secondary, and then they announced the secondary up here and hammer it. My guess is they'll probably price this one in here. Dr. K, did you check on that CRM?
What's that?
Salesforce secondary. I'm checking on that right now. Whoops, that's not it. CRM. No, they haven't. They filed a 7.19 million secondary. Stock's been flying back and forth. I've been trading it back and forth a little bit. CRM, they announced secondary, I think, on this day, and the stock actually moved up, and it's here on this day. Now you're in this little flag pattern after this gap move. It looks like it wants to go higher, so. I will say, though, that I'm intrigued by the action. I've been watching the action in the oils, because they may be trying to turn the corner here. You got EOG, looks like it's trying to turn the corner here, and it may very well do that. So I'd keep an eye out for that. You're seeing FANG is turning the corner, and they look ugly. They set up along the 50-day. Look at this, for example, GVX Greenbrier Companies. Reminds me of the Greenbrier Resort. But see how this thing looks real ugly, and it actually violates the 50-day on an intraday basis, but turns around and goes back to the upside and breaks that to a new high. And you actually had a, you could consider this, 1, 2, 3, 4, I think this was a 5-day pocket pivot, if I'm not mistaken, because I know it triggered an alert for me. Volume here was 508. Volume here was 580. No, that wasn't. Maybe this was it here. Sort of a pocket pivot breakout on a 5-day move, and that seemed to work. Stocks going higher, holding along the 10-day. But you see how that works? Here's another one. It breaks down, violates the 50-day, so you're supposed to sell it, and it turns right around and goes back to new highs. And this is typical of this market. So Tesla, somebody says buy another 100 shares of Tesla to keep it going. No, maybe I need to get by like 5,000, then it'll just tank immediately. We'll see. But acting well, and I really do think that this is a battery play as much as, well, even more so than any of these other ones. Fuel cell. Why would you buy the stock? A $2.48 stock. Why would anybody buy the stock? I don't get it. And I think even the plug, yeah, okay. It looks kind of exciting because of this, and it looks like it might be trying to, but it's just junk. It's junk. When this is your institutional quality leader, and now it's a big bad battery play. So looks good to me. Anyways, somebody says yes, at home is Chinese. Yeah, and the Chinese stocks are pretty crazy. I thought this EJ might have been playable. He had a couple of pocket pivots. Look how that fails immediately. I think JD is probably the better, more institutional quality play, and you can see it's getting support at the 10-day line, which is pretty much what the doctor ordered there. So that's acting fine. Let's see, how's our Twitter doing? Still coming down, 49.20. Let's take a look at this. I don't know. I'm going to say 48 is probably absolute support, but I watch this on an intraday basis. And they're probably just going to keep kicking it down. You might have a bunch of insiders that have decided they want to unload some stock, so they're going to do it. Kihu crapped out too. Yeah, this is another one. Here goes again. So you're saying uninstall and then install it again, right, Dr. K? Is that what you're suggesting?
Yes.
Okay.
But give them a call first because they might have some quicker solution.
But it happens a lot. It just all freezes up, and it's sort of a pain in the ass. I mean, look what it's doing
sounds
right
like
now.
it's
I know what's the matter. I
approaching
put in the wrong symbol. Yeah, another one that crapped out. But if you look at this,
Or operator error.
it could be operator error. It sort of looks like a big head and shoulders, and now you got this massive volume breakdown. Now this one looks like a short to me using the 50 days as a stop a few days ago, but the market's going up and I'm long. I'm not really thinking about throwing out shorts, but this thing gapped down here on huge volume and it's continued lower. I'd probably watch this on a rally back up, but that looks like a head and shoulders type formation. Let's see, what else was a doggy head and shoulders? Yeah, I'm looking. You watch these. This is sort of a head and shoulder. I don't know if this is the right shoulder, if it's going to start to go higher, but it wouldn't surprise me if it ran into resistance right around at this peak somewhere and rolled over, but we'll see. It's right up there right now. Yelp, same thing. If you look at it, I'm just going over some possible short ideas just to have some things to think about. It looks like a big head and shoulders, but it's trying to come out. But what happens a lot of times on a right shoulder is that you will see the stock make a marginal new high, and it's looking really good, and you see a light volume week that's kind of churning around, and that's a top. So keep that one. Coors is a short on strength. Here's what Coors looks like. This is a late stage failed base, so it's a short right here, and now it's at the 50-day. It's below the 50-day, which is at 83.36, or the 10-week rather. Notice also you get some resistance at the peak of this range. And this looks like it wants to go lower, but I don't think you're at an optimal short point here. You need to see it rally back up towards the 50-day. Let's see, Splunk is on fire today. 50 up $9. That's quite amazing. Look at that. But that's what you look like on the weekly chart. Are you going to buy it? I mean, for all you know, you're running into right shoulder rally land, so not really something that I'd want to be messing with here. What are some of the other let's see, data? This is another one that's rallying. You know, if you look at it on a weekly chart, this just looks like a big, ugly head and shoulders and kind of running out of gas. Let's see when e-signal decides to bring me my chart. Here we go. So you're seeing this thing running up, back up. Maybe it gets to the 200-day. I don't know, but kind of interesting how you're seeing a lot of these patterns, and there are a number of stocks that are rallying within formations that look like they could be head and shoulders in the making. Data. You even look at cores. You could start to say that this is a left shoulder and this is a big head because you get the big break down the right side, forms the right side of the head. Now you're forming these little shoulders, and so you know, it's got some issues here, and I think it's probably shortable into the 10-week moving average. The trick here is, do you want to be long or short? And my guess is it may be a sort of environment where you're able to do both at the same time. Okay, Tesla coming in a little bit, back to 271. We'll see what happens here. I still think the market could pull back. I'm actually playing it kind of light-footed here, taking some profits, backing away, dumping my Twitter. But you know, I still think that's potentially a good stock longer term. But we'll see. I think it's all going to depend on what the market does. And I think right now you have geopolitical risks with what's going on in the Ukraine and also this ISIS thing. I don't know what's going on in terms of a response, or if the U.S. is going to do something. I know that Secretary of Defense Hagel the other day was out saying that they're a serious threat and they're much better financed than Al-Qaeda and blah, 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 and they're an immediate danger to us and we need to do something about this immediately. And then Obama comes out yesterday and says he's not doing anything. They've really got things coordinated over there. I think earlier in the week, the press secretary, the White House press secretary, was saying that President Obama had a comprehensive plan to address the situation in ISIS. And I guess what qualifies as a comprehensive plan in the Obama administration is doing nothing. So, you know, I guess the market probably likes the fact that we're not doing anything in there right now, but I don't know. It's kind of like having an opportunity to do something about Al-Qaeda in the 90s as Clinton did and passing on it. So, somebody's getting false flag terrorism. Get used to it. Well, okay, it's 9 o'clock. We're pretty much done, I think, here. Yeah, some stuff continues to act fine. Market's a little choppy this way and that, and but overall, you know, there's places to make money, and I think the litmus test of any rally is whether you're able to make money, and that's kind of been the case, I think, so far. I would say it's not all that easy, especially if you're focusing on buying breakouts. Even I think IBD is mentioning that a lot of stocks have stalled after breakouts. That's pretty much true, and that's why you want to be buying the pocket pivots coming in, you know, to the 10-day, the 50-day, and whatnot. So I think that's really the better strategy. Anyways, another birthday wish. Thank you, everybody. I do plan on having a great birthday. So it's still early, though. It's only 9 o'clock here on the West Coast. Somebody's asking me, last question, thoughts on support areas for cores. Thoughts? Well, just look at the chart, okay? What do you see? You see you're coming down here, you're on top of this little area, so maybe that's a support area. It has been so far because it went below 80 earlier, and now it's at 80.63, okay? And I would probably be looking, if I'm short closer to the 50-day, I would probably be looking for an undercut of this low as a downside price target on the short position. Excuse me. So, you know, that's kind of where I would be at. But I think if you're trying to short it here, you're a little late. You want to be shorting a rally up into the 50-day. But you just look at the chart. You can see where the support areas are. And I think, you know, as I write in the new book, short selling is a lot about putting clues at the scene of the crime together and trying to figure out, you know, you can see here, for example, as you rally here, you want to short it. It's at the 50-day. It's getting close. There's resistance along these levels, and notice how it holds right around these peaks, not this peak, before it heads lower. So you might want to test a short there, okay, as it's coming up. And if it goes a little further, you might add a little bit. If it keeps going, then you cover and then get out of the way and wait to see what it does from there. But you can use a little common sense in terms of understanding where you see areas of congestion on the upside and where you see areas of congestion on the downside that might be support, such as the top of this area here, right around the 80 level, but also where it might undercut a low, and that would be your price target. I go into a lot of detail on this sort of thing, what I would call the mechanics of short selling, in the new book, and hopefully that sets off a lot of lights for a lot of people, and they understand that how you're working it. But it requires a lot of thought and a lot of working out, if the stock does this, how am I going to react, and kind of knowing ahead of time and keeping things tight in terms of stops and being willing to come back and short a stock. So that's pretty much how I work it. Anyways, thanks everyone. Additional birthday greetings. And I guess we'll just see where this market goes from here. So far, here comes Tesla now. So 270.70, 270.63 on the bid. Where's our Twitter? 49.43. Oh, it's bouncing there. It's probably going to need to settle down, so I'm not really in a hurry to come back into this. Hopefully that turns out to be the right strategy. But I don't really worry about it too much. If I make a decent profit on a stock, if I can get 10, 15, 20% even on something, and just do that repeatedly while keeping my risks low as I operate and not taking any big hits when I'm wrong, that has worked very well in 2014, as it did in the latter half of 2013. So anyways, you got anything to add, Dr. K, before we sign off?
I think we're all good for the long weekend.
All right, yeah, everybody have a great long 3-day Labor Day weekend, and hang in there. Keep running things tight, and we'll catch you guys next week. Take care.
So long, everyone.